Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. As always, and viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and we will try to get all your stock-related queries answered by the experts. But don't forget, viewers, that this is the Diwali special week, and throughout the week, we are getting you the special and the top recommendations from our experts in terms of 3 categories where you can invest in. So we will get to know about that. But before that, let's have a look at what the markets are up to. So as of now, quite a muted action coming in on Nifty as well as Bank Nifty index. But when it comes to the top gainers for Nifty 50, then M&M is holding strong just ahead of its earning this time. The stock is up around 2.5% in trade as of now. Even Apollo Hospital, another result candidate for today, we are awaiting the numbers, is gaining with almost 2% as of now. Other than that, IndusInd Bank, Tata Motors, Hero MotoCorp, Power Grid and even Maruti Suzuki are some of the top gainers. So clearly, autos are on the roll. But on the flip side, some of the counters from the IT space, the FMCG basket, as well as Reliance is seen to be dragging under pressure. Nifty Bank holding a gains of almost 80%, but the breadth of the market is quite even. Steven, 1,000 shares in terms of decline and advances, what you can see on NSE as of now. So that's how about the markets are up to, but a lot of stock specific action. Other than that, a lot of calls that you will be waiting out for. So let's go across and find out the top Diwali recommendations from our experts. And with this, let me welcome on board Kunal Bothra on the technical side. And Kunal, very good morning to you. Like always, please go ahead and give us your Diwali recommendations for today.
Thank you so much for that, Srishti. Good morning to you as well as to everyone. Now, in terms of the 3 categories where we typically expect the stock specific moves to happen, the first stock which I would actually recommend would be in the safe sparklers, which is traditionally from the larger cap names and the ones which are looking very attractive. I would actually go for ITC at current levels of 430 approximately. I think the stock has gone through a reasonable correction. I think from those 495, 500 levels, a few months back to now, the stock correcting more than 15-16% from those levels. I think it's come back towards a reasonable support point at current juncture. The long-term structure is quite positive for ITC. So this could actually be a good zone to try and nibble into the stock price. Would look out for at least a retest of the previous highs and maybe even beyond that as medium term to longer term returns for ITC. Now the other category, which is high risk rockets, I would probably look out for stocks which are actually in the in signs of turnaround. Aarti Industries apparently is one of the names which has popped up on the charts in the last couple of days, especially after the breakout of the 200-day moving average about that 500 mark. So looks very attractive, and this could probably be a good turnaround or a possible strong turnaround candidate over the near to medium term. So that would be again a strong buy candidate from the high risk segment. And from the value bombs, I would probably believe that City Union Bank is one stock which had performed quite well in mid part of 2021-22. Start of 2023, the stock went into a major consolidation. I think now the stock seems to be coming back. It's confirmed a breakout, a sustaining about the 200-day moving average at this 120-30 mark for itself, where those averages lie. Now the stock is at 140 plus mark. Looks very attractive. Would look out for targets in the range of 170 plus.
So those are the top picks coming in from Kunal this morning for all of our viewers. Yes, for Safe Sparklers, he has ITC today. Finally, ITC has made it to Kunal's list, looks like it. High risk rocket is Aarti Industries, while on the other side, value bomb is City Union Bank. Those are the top picks coming in from Kunal. In a short while from now, we will get you the top picks from our fundamental analyst, that's Vivek Karwa. But before that, let's bring on board the management of Nazara Tech. We have Nitish Mitasen, who is the joint MD and CEO at the company, joining us this morning to talk about the earnings. If you look at the numbers, spectacular numbers coming in for Nazara Tech on a year-on-year basis, on a consolidated basis as well. Very good morning to you, Nitish. Thank you so much for joining us on ET9. Firstly, let me talk about your earnings. Your profits have scaled higher, very sharp uptick coming in for profits, for revenue, as well as your margins. So if you could tell us what were the key drivers in the quarter gone by, and are you likely to see this sort of a performance sustaining?
Sure. No, our focus has been, growth alongside profitability. We think, the gaming opportunity in India is very massive, and it's very important to build a diversified and stable platform that keeps growing on its own self, quarter on quarter. And I think we are focusing a lot on the core metrics of our business, focusing on the right KPIs so that we can deliver this profitability alongside growth. So I think that's what's the input, and that's the results you're seeing in terms of the output. I think the rest of the year should be good for us. We see revenues increasing at a slightly faster pace than what they have in the first half of the year, and we will continue to maintain or enhance, our profit margins. Looking into FY25, I think we have a very good base set now to launch for much more aggressive growth going forward.
Okay. Hi Nitish, a very good morning to you, and this is Shrishti also joining in. Looking at your gaming margins, that's around 20.9%, esports at 5.8%, and at tech at 6.2%. What is the outlook on the overall segmental margins going ahead?
Look, in the medium to long term, we are aiming to get our gaming margins, above 25%. I think the right range we should be able to get our gaming margins is 25 to 30%, and that's what we will keep striving for. Our esports business remains a strategic business for us. Therefore, our focus is not so much on margin expansion at this stage, but it's all about strategic modes that we can create in the business. And we will continue to grow organically as well as through some acquisitions in that space. Our AdTech business has actually had a little bit of a pause, but we are recovering well. And we expect the margin profile to keep improving because a lot of the revenue mix is changing from services to product. And you will see in the coming quarters the AdTech business margins to improve. So I would say on a holistic basis, as we go into FY25, our margins should keep improving.
Nitish, let's talk about Kidopedia, because we've seen a minor decrease in the ARPUs on that particular front on account of the summer win-back offers. If you could help us with some sort of a timeline, by when do you expect this to recover? And also if you could tell us what sort of a subscriber growth are you aiming at?
One of the big challenges currently we are facing in the Kidopedia business is the ability to scale up our user acquisition spends. We have been using Google as the main source of acquisition, and while we are able to get users at the cost per trial that we are comfortable with, we have not been able to really scale up the spend. So we're working very closely with the Google team. We are looking at new ad networks and also new ideas on how we can kind of break through this ceiling that we have hit. I think that's the core focus on Kidopedia, and once we're able to do that, you should be able to see increase in subscriber base. Overall, I think the market is very large. We just need to navigate how do we get the user acquisition at the cost we want and at the scale we want. There's a lot of work in progress over there.
Nitish, in Q2, you transitioned your main titles from WCC2 to WCC3 to online-only mode. Has that impacted the ad revenue?
No. So World Cricket Championship is India's most famous and most popular cricket game. And, we operate it with a large team that's continuously developing it. We think that the potential for this game in terms of monetization is much, much larger than what we have been able to realize till now. And we are making significant disruptive changes to kind of try and achieve that. So one of the things we did is, move it from an offline to an online mode, which helps us realize more revenue per user. That increases our lifetime value of the user. And, we can spend more money in scaling up. So these are some of the ideas we're experimenting with, and very hopeful that in the coming quarters, you will start seeing larger scale over here.
Actually, within the real money, Classic Rummy also posted an EBITDA loss in Q3 in the quarter gone by. I mean, before stabilizing to break even by Q4 FY24. Is that your expectations by any chance?
Yeah, just to clarify, in the quarter gone by, we actually posted a EBITDA profit of a little bit over 3 crores in open play Classic Rummy business. It is a Q3 where we expect that there might be some minor loss, and this is largely on account of the new GST policy that has come in effect from 1st of October. We are tweaking our business model over there, and we expect that by the end of this quarter, we should break even again and get onto a growth curve after taking this into the denominator.
Actually, I stand corrected on that particular front. That was the expectation for Q3. Just talking about your esports, EBITDA was around 6.9%. How are you looking at growing the esports segment? Also, ad tech seems to be in a slow lane. If you could tell us what are the reasons contributing to that?
So on the esports side, we have two verticals, the Nodwin Gaming esports business and Sportskeeda. Both the businesses are growing well, especially for Nodwin Gaming, where we hold a lot of tournaments, esports tournaments. The second half of the year, which is October to March, is the main part of the year, where about 65% to almost 70% of the revenues of the whole year get generated. So we're quite excited about the upcoming quarters on that business. And our Sportskeeda business has continued to perform very well. We acquired a company called Pro Football Network, which is actually on a year-on-year basis more than doubled its user base. So combined esports business, I think, will continue to grow well. Our priority is not on margin expansion over there, but if we can still increase our profits, we will. I think strategically making sure that we continue to be the dominant player in that space with the largest market share is extremely important. On the ad tech side, we had a little bit of a hiccup because a couple of quarters back, we had lost our largest customer, although he was a low margin customer. But we have built a very strong pipeline and we're starting to see a good uptick. Our margins are expanding. So I think in another couple of quarters, you should have a very stable business that is growing again and with much more improved margins. So I would say it's experiencing a short-term pain, but in the medium to long term, it's actually going to benefit the business.
And lastly, Nitish, if I may ask, then Nikhil Kamath has bought more shares of Nazara Tech. So how are you leveraging his expertise? What does it mean to have these marquee investors?
We've always been fortunate to have the backing of marquee investors, as you know, right from Mr. Rakesh Jhunjhunwala to now Nikhil. Specifically with Nikhil, I've had the opportunity to interact a few times after our meeting. And given that he's a young, very successful tech entrepreneur, obviously he has a perspective on our business. And we are taking his valuable feedback and, leveraging it as we can.
Then we leave it there. Thank you so much, Nitish, for joining us on the show to talk about the quarter gone by for Nazara Tech. Where do you see it headed from here on? Also detailing every segmental business of yours. Thank you so much for joining us on ET Now. Well, that was the management of Nazara Tech talking about the earnings, the way forward going ahead for the company. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we will start taking your queries. Also ask Vivek his top picks, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and yes, it's Diwali special. We had Kunal actually outline all of his top picks for our viewers, and now it's time for Vivek Karwar to tell us what are his top bets. And Vivek, I hope you will appreciate the fact that this time we've decided to kind of split the top picks in three different categories: safe sparklers, high risk rockets, and value bombs. And I've heard that you don't have one, but you have two in each categories that you will advise our viewers to look at.
Oh, I didn't know one was enough. That's the reason I sent two.
No, absolutely.
Anyway,
More the merrier.
So, most probably we'll be meeting only after Diwali again. So let me take this opportunity to wish you all the viewers and entire market a very, very happy and prosperous Diwali. And may the Diwali bring enough light in our portfolios. Now, coming up, and yeah, you said splitting this into three categories is an interesting thing because no investor is same, no risk appetite is same, and hence anyone wanting to choose can choose accordingly. So somebody wants to really play safe, he can play safe, or he likes to play with bombs, you can go with bombs. It's like that. So my first bet would be ICICI Bank. Well researched, so I need not talk about fundamentals much, but valuations compared to HDFC and Kotak, I think ICICI is struggling at low valuations, and the stock should at least give you 1100 rupees by next Diwali. So very, very safe bet among the large caps. So first bet would be ICICI, and that would be the safest. If you buy, there is no stop loss required, and you can buy as much as you can. The second bet would be Piramal Pharma. This is definitely a volatile stock, but I'm putting it in a safe category because after a long time, after the split happened, the company has shown profits, and the management is very, very clear that here on the things are going to be good. And also their CDMO player should really turn around this year. So maybe by next Diwali, we will surely not get it at 118, 119, what it is at trading at right now. So I find stock should at least be 160 at reasonable levels. And yeah, you can always have some small stop, maybe at 110, because this is going to be a volatile counter. But yeah, I still feel it is a safe bet. And as a disclosure, I have it in my personal portfolio. Among the high risk, my first bet would be Prakash Industries. Now, this is an interesting company which started moving from 50, 60 levels, went till 200, and corrected again till 140, and is now trading at around 160, 165. I think this company again should cross 200 levels. There are mining which has been issued to it. And by next year, I think most of these mines should be operational, and companies should start making profits by 2025. So as and when we hear the news of mining those mines getting operational, I think this stock should again slowly and steadily start moving up. And if you look at the market data also, you will find that promoter himself is very, very bullish. He is continuously releasing his pledged shares and also buying in the market as and when there are dips. So Prakash Industries, it is risky surely, but yeah, with a stop loss, you should buy Prakash. The fourth one, the risky one again, India Bulls Housing Finance. Now, many would say as a fundamental analyst, I should not touch this stock, but what was it earlier is not the same, except the name. Everything else has changed in the company. The management has changed. In fact, there is a representative of LIC on it right now. And I think this company should slowly recover from here. And the way housing market is going, you launch any project, things are really going well. And when stocks like LIC Housing Finance can really move up, I think this stock also should do well and again go to 220 levels by next Diwali. This is what I feel. Value picks, again, as a disclosure, the first one, RPSG Ventures, I hold it in my personal portfolio. So this is one company which holds 50% in First Source Limited. Available at around 2,000, 2,500 crores market cap, and the valuation of First Source itself is around 5,500 crores market cap, which it holds. Overall, it also holds the ownership of Lucknow Super Giants, if I get the name right. So the IPL team, and the revenues, if you look at last year revenues, the company has almost touched 500 crores. So the sports revenue would be big going by next year. I think next IPL it can easily be 750 crores, and stock is really undervalued. So you need patience if you buy this. Last 2 years it has not moved anywhere, and it can stay again for 2 years. But when it moves, I think it should be a multi-bagger. The last one among the value thing is Kalyani Investment Corporation Limited. Again, this is a holding company of Bharat Forge, holds around 30% in Bharat Forge. And if you look at the NAV gap, you find the stock is trading at least at 75-80% discount. So in fact, on your sister channel, we spoke about this stock at 2,300 with the recommendation of 2,900. It went till there. But I still feel that stock should at least be 3,500 by next Diwali. So these are the value picks, and you really got to be patient with value picks. So that alone, people should keep in mind.
Be patient when it comes to value pick. And just in case all of our viewers are wondering what is KICL, is Kalyani Investment Company Limited. So those are the picks coming in from Vivek, and he's made sure that everyone gets one bonus extra sort of a stock as well. But there's one stock that seems to be really sparkling on screen, and that has to be Lupin. Look at that. The stock is actually near the day's highest point, came out with stellar set of numbers, and now we are joined by the management of Lupin. We have Vinita Gupta, who's the CEO of Lupin, and Nilesh Gupta, who's the MD at Lupin, as well as Ramesh Swaminathan, who's the executive director at Lupin. A very good morning to all three of you. Thank you so much for joining us on ET Now. And Vinita, coming first to you, congratulations. Great set of numbers coming in the quarter gone by, and it's been a strong quarter for your company. And not just when you talk about the domestic business, especially your US business also has performed pretty well. Do you think that about $210 million is now the base run rate going forward for Lupin in the United States?
Yes, we have guided in the past. We've been working hard to really stabilize the US business, grow the baseline as well as new product launches to drive growth, and that's what you see in the quarter. We certainly will be working hard to sustain this level and expect US revenues now to be at the $200 million plus a quarter.
Hi, very good morning to all of you. And Vinitha, wanted to understand more about her US business and especially on G Spiriva. How much of the contribution has come from G Spiriva in the quarter? If you can't give us a number, then any sense that how is the demand prospects right now?
I'd say it's been material. It's a significant product launch for us as we had anticipated, and it has proven to be a very successful launch. But having said that, our baseline business has grown as well. We expected Spiriva, like other inhalers, to be a slow ramp up, and so it's the substitution has been on track with what we were expecting. And it has helped us grow the business quarter on quarter, as well as overall respiratory revenues, now including albuterol, Spiriva, and other respiratory products in the quarter have been more than 40% of our revenues. So really strong contribution from complex generics overall, including Spiriva.
Right. Very good morning to you, Nilesh, as well. Thank you so much for joining us on ET Now. And if you look at your India business, it's actually grown well, but that excluding the in-license portfolio. If you could explain to us and let us know what sort of growth hurdles are you facing in that particular segment?
So we're very upbeat on India. As you would know, in the last 10 years, the market grew over 10%. We grew over 13%. So we have this goal of growing 1.3 times the market growth rate. And we're doing that in most therapy areas other than diabetes. We actually grew a little slower than we would have liked. 6.9% for Q2, 8% for H1. If you take out NLEM impact, our growth was close to 9%. But we're very upbeat. Our focus remains on chronic, on our big three therapy areas: diabetes, cardiovascular, and respiratory. But there's a bunch of other areas that are growing really nicely as well: gynecology, vitamins, opthal, oncology, urology, even everything growing at double digit at this point of time. I think we're still going to keep growing slower on the diabetes front, but everything else should basically be double digit growth. And we've added representatives, so now we have close to 9,500 people in our sales force, including the medical representatives. We spun out one new division. So I think the focus is going to be on adding sales force, improving sales force effectiveness, and focusing on the right product portfolio to be brought. But we see this as a unique opportunity for us.
Well, thank you so much for that, Nilesh. But Ramesh, I want to get you in for the margin expectation, because this time the gross margins were also very strong this quarter. Were they largely driven by US, and what were the factors that aided such a sharp jump?
Yes, gross margins, of course, increase. That's because of the fact that it's the outcomes of, in fact, the kind of products it released across various markets. We had Darunavir previous quarter. We have Spiriva this quarter. We also have better sales in Europe, thanks to Lupin and the like. So, whilst the bigger theme is, of course, products, the top line moving, it's also a question of execution across various other parts as well. For example, in terms of cost, we have had a tight rein on the cost across various lines. We conducted a workforce planning exercise some time ago, and that has borne fruit. We worked on a host of other lines as well. The compliance story, of course, came to play. So we got out of 3 of those facilities, 3 out of 5, so to speak. There's of course the tailwinds in terms of price, in terms of price stability in America, but also the fact that there is price reduction across various raw materials and the like. So if you see our trend over the last 4 quarters, 5 quarters, so to speak, in terms of EBITDA margin improvement, there has been continuous effort and it's been continuously rising. So you would like to keep this going.
Said, Ramesh, you've said that you all have been consistently actually increasing your margins, and your margins are a multi-quarter high, and the quarter gone by is surpassed that 18% mark. So would you like to guide it upwards now, give an upward guidance for your margins?
Yeah, that's what I was kind of leading to, because as I said, the margins last quarter was 14.4%. This time it's 18.7%. So you'd like this upward trajectory to keep going. Obviously, it calls for a lot of effort and execution from our end, and all of these initiatives that you've taken have borne fruit and would continue to do so. We're still lower than the peer group, so to speak. As we speak about the competition, they're all middling in the 20s. And that would be our aspiration target as well, given the portfolio that we have, given the various initiatives that we have taken. The aspiration would be to get to the same level over time.
Okay, and Vinita, the company has been doing blockbuster launches back to back, but going ahead, any niche launches in the US that you would like to call out?
Well, I mean, tiotropium is going to be an important one for us to scale up over the next couple of quarters and the next couple of years. But we were very pleased to get key approvals like tolvaptan in October, Xywav from Somerset. Tolvaptan actually is a product we hopefully will launch in fiscal year 26, so within the next 2 years. That'll be a large one for us. And we have, if you look at the first half of the year, we've launched 4 products. We have 5+ launches in the second half of the year. Some of the ophthalmics as a result of clearance of our Pithampur Unit 2 site and ophthalmic product approvals that we are starting to see. And a couple of injectable products as well as products out of Somerset, like diazepam gel that we talked about. We just launched the last week, cyanocobalamin that we expect to launch in the next couple of weeks. So now that we have, the compliance situation addressed across a number of our sites, and a pretty strong focus on pipeline execution, delivering on new product launches, we feel pretty good about growing the US business, in the quarters and the years to come.
Okay, with this, we'll let you go all on that front. Thank you so much for joining us today live on ET Now, as well as festive greetings to all of you. So that was the management of Lupin. Strong commentary coming in on the US growth front as well as on the margin front. The stock is holding around 2% of gain as of now. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back, and then it's the time to take your stock-related queries.
Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get your answers for all of our stock-related queries. Yes, viewers, we've not been able to take your queries today because we had a lot of management. Given that it's Diwali, along with Diwali, it's also earnings season, so you had a lot of managements to adhere to. But now we are back. We have Kunal as well as Vivek, who are patiently waiting by. Thank you so much. And let me kickstart with the queries then. And this one is coming from Ajay, and this one is for you, Vivek. He wants to know whether Kaya, HFCL, Purvankara, or even for the matter of fact, Phenolics Twins are good for a long-term portfolio. You can talk about either two of them from this list.
No, you'll have to repeat the list, Shreya, sorry.
So
Phenolics and then?
It's Kaya, HFCL, Purvankara, or the Phenolics Twins.
Except Phenolics Twins, none of them. Because fundamentally, I don't think other stocks are worth to be spoken about, first thing. Second thing, among Phenolics also, if you look at Phenolics pipes, that company looks cheaper compared to the entire peer group available in the market. and hence Phenolics pipe should really do well from here. If you look at again, if we talk from this Diwali to next Diwali also. So Phenolics pipes would be my first bet. Phenolics maybe second, but none of them, none of the others. And as we were speaking, I think again there's news flashing about Piramal Pharma, which we just spoke. So investors should be happy.
Moving on then, and Kunal, the next query is from Dr. Zeenat from Ranchi, holding 250 shares of Jamna Auto, but from a price of 120 rupees. What to do in this particular name? And also, she can she go ahead and make an investment in CESE at current levels? What will be your advice?
Jamna Auto is a good stock. You should continue to hold on, maybe closer to 105, 110 range. You can look to even average further if you have additional capital. CSE also could be a good stock to look at. I think the stock has been consolidating since quite some time at this 85 to 90, 90, 91 odd zone. I believe that whenever the stock gets into a breakout, we could expect the stock to get into not just the 3-digit mark, but I think even beyond that level. So that could also be a good bet at current levels.
All right, this one is coming in from Vishal. He's writing to us from Dubai, and this one is for you, Vivek. For Mohra Trading, he's saying he intends to sell Balaji Mines, where he's seeing 40% loss, Sharda Cropchem, where he's seeing 35% loss right now, and invest the proceeds in Tata Motors, where he's already holding some shares, as well as DLF as a fresh entry. So he wants to know whether it's a good time or good period to buy these counters during the Mohra trading. Do you think this swap will work? Also, what sort of an entry level do you think will be good for Tata Motors and DLF, if you can help him with that?
See, I think DLF he can buy during Mohra trading also, because overall the real estate segment and sector looks quite interesting. And DLF again is also reducing its debt continuously. And of course, helped by the massive bookings the projects are seeing as soon as they are launched. So DLF looks quite interesting. Tata Motors, I would be little careful at this point of time, because on dips, yes, I should surely buy it. But at around 620 levels, 610, 620 levels would be a comfortable entry point, because it is almost at, at highs what it is trading at right now. You've got to be little careful. And the results have already gone by, and that and hence I think 610, 620 should be a net good entry point.
The next query is for you. Nanda Gopal is wishing all of us a happy Diwali, so festive greetings to you as well. But he wants your advice on Reliance. Can he go ahead and make an investment at this point with a 1-year investment horizon?
I think from a 1-year time horizon, I don't expect too much of a fireworks coming into the stock price, unless there is some kind of a news flow which gets attached to the stock price every now and then, like what we saw 2-3 months back when the geo news flow surrounded the stock price, and it moved from 2200 to almost 2600 levels. I think other than that, I don't see any major reasons why you should be looking at Reliance Industries purely from a 1-year investment perspective. If you can broaden the time horizon to 3 years plus, then it makes sense to buy at current levels.
All right, so that's the take coming in on that particular query. But yes, a paucity of time. So we will actually wind down this edition of queries. Thank you so much, Vivek, as well as Kunal, firstly for sharing your top Diwali picks, waiting by patiently, as well as resolving queries, as many as we could take in this particular segment. Thank you so much for joining us on the show. And viewers, with that, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, interesting chat between Vikram Oza and myself. Shrishti, we did speak about the snakes and ladders, the trends that moved in somewhat 2079. So when we come back, we'll have a special excerpt from that show. Talking about sectoral indices, right now realty is in top gear, actually, you say. No doubt you're seeing maximum construction happen, maximum city that is happening right now. But yes, you can see the realty demand on that particular front as well. And realty sector also has been performing exceedingly well. You also have pharma that's actually trying to make a comeback, at least this year. We remember that during the COVID time, the pharmaceutical sector had a great run Then last year it did see a dip, but this time they're trying to actually claw back. They're trying to actually gain back their mojo. So yes, you have all of these sectoral indices, but let's not forget one particular bright and very bright spot while rest of the market is just moving. This one is sprinting, and it has to be the broader markets, especially the small cap index. And as you can see, these are the sectors or the stocks that actually soar in the small cap sector, small cap index, I beg your pardon. Like Suzlon has seen an uptick as much as 344%. You have BSE, you have APAR, and a lot of other companies that have actually seen that sprinting move coming in.
I've been speaking to a lot of experts about whether this kind of traction that we are seeing in the broader markets is going to sustain or not. They seem quite positive because there is always that kind of uncertainty when you see a sharp run-up in the broader markets, because not enough information generally about small caps. But when they look at the visibility on some of these, and we're seeing some of the action in the primary markets as well, all of that moving into the large cap kind of space in the future is where hopes are pinned.
Absolutely.
And we are definitely going to see some of these make it to large caps. But right now, the action is in the broader markets, right?
Yes, absolutely. And a lot of them actually have taken out spring cleaning. It's not just the houses that are being cleansed right now for the festivities, but also a lot of these managements, also a lot of these market veterans have spoken of how small cap companies have actually bettered their governance, the corporate governance, and now you're seeing some sort of quality as well creep into the broader markets as well. That's why most of them are feeling a bit comfortable on that particular front. Let's not overlook the billionaires, the India Inc. billionaires. Definitely, there are a few unlikely candidates. One of them has to be Savitri Jindal. The other one is Cyrus Poonawalla in the year gone by. Look at the wealth that they've actually created. But there you go, Mukesh Ambani. The climb has been pretty much flat when it comes to the billionaires list for Mukesh Ambani. But there's one tricky billionaire, actually, Vikram, who's on both the sides. Who's also seen the snake side of it as well and the ladder side of it. Any guesses?
This has to be Gautam Adani, and that journey has been quite remarkable. It is the kind of stratospheric rises, the sudden drops that we've seen in his fortunes. Just take a look at how his net worth has fallen from the recent peak that we've seen. It's been quite a dramatic journey, but that's always how it's been.
Well, actually, to be very honest with Gautam Adani, definitely it has to be the news flow that actually marred the stock performance.
It did, in a big way.
In the month of January, there you go, he was at his peak. That's his net worth. If you look at it, $149.9 billion. And then that sort of
all the way down to 61 billion.
Yes, all the way down to 61 billion. And it's just news flow that can actually do wonders when it comes to a person's wealth, and not wonders in Gautam Adani's case this time around. But definitely, one thing very key to note is a lot of the stocks in Adani Group counters have actually recovered from those lows that it had hit in the month of February and March, and remarkable turnaround coming in most of these counters.
Yeah, so like Adani Enterprises, like Adani Ports, we've seen that kind of
Yes, we've seen that sort of a comeback. You know, once you know the dust is settled in and you have the investors saying, no, these are good businesses, we need to back them. And you've seen actually the stock performance for yourself. There is one very interesting topic of discussion that everyone in the markets used to have, and that is about tomatoes versus Zomato.
Oh, yes.
Yes,
and what a remarkable state of contrast that we've seen. Now, tomatoes turned out to be those gold nuggets, and those turned nuggets overnight in Mumbai. They soared past the 200 rupee mark. And this, before they took this nosedive back to the bargain bin at 30 rupees a kilo.
Right, absolutely. And there was a time when everybody was only talking about Zomato stock also at the same time because Zomato's stock price wasn't moving at all.
Yes, it was static.
It was static. It was static around 50 odd rupees, and everybody used to only talk about the fact that, looks like tomatoes prices will go higher than Zomato, but look what Zomato has done. Actually, kind of, you know, told the naysayers, hey, look where I am. I'm only rising higher while you can keep having the...
But the buzz was so strong around the Zomato listing, the IPO when it came out. Everything was so high when it came to expectations. But then, as far as these new age tech stocks are concerned, they were caught in a time warp for a bit of time.
Absolutely, absolutely. But the one of the first stocks that actually broke those shackles was definitely Zomato, and then Paytm as well.
True.
But Zomato, look at the rise that particular counter has seen. It's 163% off the year's low. So yes, it's a telling story by itself. And you know, while everyone actually gave up eating tomatoes, Vikram, I was the only one who would stand out saying, I've been doing that since ages because I prefer my burgers without tomatoes.
So you didn't miss your tomatoes.
I didn't miss my tomatoes. Yes,
up.
I couldn't even participate in that discussion. Actually, to think of it, I missed out on that.
But I remember people putting up posts saying, "Look, I'm feeling rich. I'm having tomato soup."
Oh yes, absolutely.
Yeah, you remember those.
Yes. Yeah, now is the time of onions, actually.
Yes, now we'll have to talk about onions in the same breath.
Yes.
But that's the way the story has moved, and it wasn't just Zomato. You're talking about these new age tech stocks like Cartrade, etc.
Yes.
They also have done this kind of remarkable move up. And so the kind of faith that was reposed in some of these companies, that has come sparklingly back as far as market action goes.
Also,
so they moved up
you
with the rest of the market.
Give it to the promoters of these companies. They've actually made sure that they are not bogged by all those commentaries. They've made sure that they turn around their business.
Right.
Look at Zomato becoming profitable. Even Paytm, for the matter of fact. Their businesses are a telling story as well. They said that, look, give us time and you will see the result. That's the reason why we were priced at that level, isn't it?
So all good things take time to come about.
Absolutely.
And it certainly seems so about the markets.